Well, hey there, it's Terry Sawchuk. It's Friday, not Thursday, so I wanted to do another 4 Minute Friday. I held off an extra day this week because there was a discussion from the Fed Chairman Jay Powell at Jackson Hole, Wyoming this morning at 10 o'clock, and so I wanted to have that data available to me before I went ahead and talked to you today. So I guess we'll start with that. The Chair Powell really didn't say anything meaningful other than he did suggest that it's time for a pivot and that they will be, I guess you could say, creating more accommodative monetary policy, which just means they're likely to cut rates or they're going to cut rates in September. He did not get into any verbiage around how aggressively they'll cut or how not aggressively they'll cut. He didn't really get into much in the way of specifics at all around policy other than to say that the time is now for it to pivot. Now, when I listened to that speech, it was pretty clear to me that there's a divergence, in my opinion, between what the market is anticipating and I think what the Fed is likely to deliver. The markets are pricing in a full percentage point of rate cuts in 2024. Well, there's only 3 meetings left. There's one in September, they don't meet in October, and there's another one again in November and then following in December. So if you do the math, that means that at least one of those meetings would have to have a 0.5% rate cut, and then the other two would just be a 0.25% rate cut because they work in 25 basis point or 0.25% increments. So the assumption is that they're going to cut a 0.5% in September. And I just don't, the data does not support that currently. Now that could change, but the economic data is really better than what a lot of people thought it would be at this juncture. And so I think it's really hard to reconcile that. And so I think on a short-term basis, the market has a little bit more room to move up. But I think in September, if he does not deliver that 50 basis point rate cut, that's going to open the door for the market to move lower. And it could move lower before then. Maybe the markets will start to kind of piece all this together. And it depends, obviously, on new economic data, whether the economy really does start to slow down. But I think the big number that they're going to look at, the two things are going to be jobs. How are the jobs numbers and the unemployment rate looking? And then, ultimately, what does inflation look like? So one of the things, and I've got this chart up here I wanted to point to, is that the Japanese yen has been strengthening against the dollar. And if you recall, a few weeks ago, the stock market kind of bottomed out down here. This is a chart of the S&P 500. This little line graph is the Japanese yen. And it's the U.S. dollar on an inverted basis. So basically the dollar was weakening and the yen was strengthening. And you can see that it kind of bottomed out where the yen is down here and then where the S&P there. They almost exactly coordinate. What's interesting is you had a run up in the Japanese yen, meaning the dollar, I should say. So the Japanese yen started to weaken a little bit and the stock market started to take back off. But you'll notice in the last few days, what you'll see here is that the Japanese yen has been strengthening again. And it's almost right back to where it was at the low point. And yet the market has not necessarily caught up. So I'm not suggesting that necessarily means that the market's going to fall here, but if there is a strong correlation there, we'd want to keep an eye out on that. As far as the S&P 500 itself is concerned, we are in the process of potentially forming a lower high here. Doesn't mean that the market couldn't push a little higher. It could, but the reality right now is that we're below where we were at the all-time high, and we made a push up here, didn't quite get there. A wick candle up here didn't quite get there, and it's moved down. And on a daily basis, we've got a green dot, which suggests that there's a reversal potentially at play. So I'd be a little bit concerned just to see, on a very short-term basis, if the market could turn down, and we're watching that very closely. So I would say that, no changes to be made right now. I don't think the market got exactly what it wanted out of the Fed Powell speech today, but I don't think it really spooked anybody either. It's just kind of what everybody thought it would be. The market's up a bit today on that news. We'll see if it holds through the end of the day. And we'll be back next week, so not a lot to cover else other than that. So next week, of course, is Labor Day weekend, so We're looking forward to that. It'll be a short week. And we'll catch you next week. Only this time it really will be on Thursday.